As a surprise to no one, the Bank of Canada has increased the interest rates again this week, this time by 0.25%, bringing the overnight rate from 4.25 to 4.5%. Now, this is the 8th rate increase that we've seen in less than 12 months, making it the fastest that the Bank of Canada has ever increased rates by this much. Now, it seems like everybody's becoming a little bit numb to these rate increases because every time these dates roll around, well, guess what? The rates are going up. And the big question out there is, when is the Bank of Canada actually going to stop increasing rates? And what information will the bank look at and can we look at to understand when they're actually going to stop increasing these rates? So in this video, we are going to have a look at the interest rates, inflation rates, and anything that the bank might look at to understand what's happening, what impact these rates are actually having, and when they're likely going to stop increasing these interest rates. And just quickly, I want to say it's not all bad news this week. A lot of the people that we're communicating with in the industry, as well as news headlines and articles from economists, even from the Bank of Canada, are suggesting that this could be one of the last rate increases that we see for the foreseeable future. So before we start to look at these charts and statistics of inflation and interest rates, just want to go over a brief history of the last 12 months. Early 2022, we started to see inflation skyrocket. And as such, the Bank of Canada turns to their best tool to fight inflation, which is increasing interest rates. And when they do this, the cost of borrowing money goes up. Households typically spend less, which drives inflation down. Now, one important thing to understand here is when the Bank of Canada starts to increase rates, it can take 6 to 12 months, sometimes even longer, for those impacts to be seen in the economy and especially with inflation. So just keep that in mind when we're looking at the numbers here. So the first thing we're going to look at here is a history of some of the rate increases that we've seen in the last 30 years compared to today. So you can see none of these are quite as steep as the one we're seeing right now, and none of them happen in less than 12 months. You know, the closest is about 15 to 16 months. And even then, most of them are a little bit lower in how much rates actually went up. So this is a very rapid increase, and it's because the inflation rates are kind of out of control, or they were the last couple months. So the Bank of Canada really had to take action against those. And the next thing we're looking at here is inflation rates in Canada. And just for everyone's knowledge, the Bank of Canada likes to keep inflation typically between 2 and 3% on the high side. So you can see starting last year, we were already at 5.1. February jumped 0.6% to 5.7. And this is when the Bank of Canada stepped in. And you can see why they continued to increase rates, because inflation got out of hand pretty quickly. And now you can see that it's starting to come down, plateaued a little bit in October, and it's continuing to come down as we move into the end of the year. Now, looking at both of these together, there's a really interesting chart from CBC News here that combines the interest rate increase, which is the red, with the inflation rate, which is the blue. And remember, I mentioned that when the Bank of Canada starts its policy of increasing rates like this, it typically takes 6 to 12 months to see these effects on inflation. That being said, you can see that inflation spiked pretty severely compared to where it was, around that 2 to 3%, but it's actually starting to come down. And you can truly see that curve here on a chart like this. So this is why the Bank of Canada and some of the headlines and a lot of the economists now are saying and predicting that the Bank of Canada is going to hold its policy, hold rates where they are, and continue to see if this number starts to come down. And if this number of inflation continues to come down towards this 3%, then yes, it is likely that the Bank of Canada will no longer increase the interest rates. That being said, it doesn't mean they're going to start to decrease them. They likely won't decrease rates until this inflation number gets back to sub 3%. And I think that's really important to know, because it could be a long time for this inflation to come back down, meaning, 12, 18 months. And just because inflation is coming down doesn't mean they're going to start to decrease rates right away. Now, the last thing we're going to look at here is some variable rates compared to 5-year fixed rates. And I think it's important to understand that variable rates fluctuate with the Bank of Canada's overnight rate. So this week, when rates are going up 0.25%, variable rates will reflect that as well. However, fixed rates changed with bond yields, as well as kind of the overall economy and where things are going. So just keep that in mind as we look at this next chart here. This is the variable here in blue, and we have the fixed here in green. But you can see that when rates started to increase, the variable reflect all of the rate increases. This is actually until January 24th. So today the rates went up again. It's January 5th currently, so you're not going to see this reflected here, but this will actually be 5.52 after today. And then you can see the fixed rates, because inflation is going up, the bond yields were changing, fixed rates also went up. But there was actually a point here in around October, November that these two switched. So for the longest time, variable rates were cheaper, you could see for a couple years here, than fixed rates. And that's why a lot of people were going with variable rates. But now fixed rates are actually a little bit cheaper at 4.39. And the other interesting thing, if I move my cursor here, you can see that the fixed rates are starting to come down a little bit. And that's what we're hearing from people in the industry and from economists, is that fixed rates are expected to go down. And that's another telltale sign that the Bank of Canada may be holding its interest rate increases for the time being. Now, that's everything for this video. Hope this gives you a better understanding of why interest rates are increasing, what's happening with inflation right now, and really everything in the market with interest rates, inflation, and mortgage rates. If you have any questions at all, please let us know down below, and we'll talk to you soon. Have a great day. See ya.